Well, hello everyone. Welcome to Trading the Trend. My name is Barb Armstrong. I am filling in for Mr. James Boyd and his sidekick Jats today. And I'm happy to be with all of you. I've got Brent Moores riding shotgun in the chat. He's a friend and fellow coach, and he understands fully all the stuff we're going to talk about today. So I got a call from my son last night, who I have chastised before when he hasn't kept me up to speed on some things in his life. And so he wanted me to be the first to know that he was skateboarding and took a tumble and ended up turning one radius in his left arm into two pieces. So he broke his arm. So there's a bit of drama there. And then my son-in-law had a very major surgery this summer. And then I was off for the Barb 2.0 project. So there's kind of been a lot of drama happening. And, one thing that we don't need is drama in our trading. And how do we prevent ourselves from, creating drama? Well, you create drama when you don't have a trading plan. You create drama when you're flying by the seat of your pants. So today is the anti-drama trading the trend class. And so, we are, we're going to talk about having a plan, trading your plan, so that if something hits the fan and it's not pleasant, that you are okay, that you've got exits in place and you know what you're doing, so that if your focus has to shift for some reason, then it's shiftable. Okay, so if you're not following me on X, I try not to share a lot of drama there, just the good stuff. But please follow me on X, Barb Armstrong CS. You're going to want to follow Brent Moores as well. He posts a lot of great content. And his handle is Brent Moores CS. So Greg is saying, are you saying I need to change your style? Well, it depends on what your style is, and you're welcome to trade any way that you like. But just keep in mind as we have this conversation today that everything we talk about here, it's for general information purposes only. None of it to be construed as a recommendation or endorsement of a particular strategy, trading plan, chart pattern, or individual stock. We're going to look at technical analysis because this is trading the trend, my friend. So, but other approaches and including other things like what's going on globally with the markets, what's happening with tariffs, what's happening with earnings seasons, because we're in the throes of that. Yesterday, we heard from CrowdStrike and NVIDIA, which is the heaviest hitter currently on both the NASDAQ and the S&P. In fact, I'm recording a short video that we'll post on X tomorrow that talks about what is the NASDAQ 100, who are the heaviest hitters. Spoiler alert, it's NVIDIA. But I go over the top 10 and which sectors are strongest, and spoiler alert on the NASDAQ, tech is over half the index. Yeah, Jay is saying a trading plan is kind of like a seatbelt. If you get hit, you're glad you were wearing your seatbelt. So in any event, know that options carry a high level of risk, aren't suitable for all investors. You have to apply for option trading privileges with Schwab. Okay, and we use the Paper Money platform, which is a great place to learn and figure out your trading plan. Make sure you understand how the platform works before you consider trading in your live account. Okay, so we're going to look at some different trends today. We're going to look at different time frames today. And given I'm filling in, we're going to look at a bunch of examples and place some trades, and I'm going to point you to some plans. I have one announcement, and I just reposted something on X today from a client who was talking about being so excited because it's 24 days. And she posted it, I guess, a day or so ago. I don't remember when, but she's counting down the days to the Dallas Market Drive. So if you have never been to a market drive, man, like one of the things that I love about Schwab is that when they do something, they are a class act. They'll put out, a breakfast if you're driving, will cover your parking. There will be a lunch provided, and then they do a really nice reception at the end of the day with great hors d'oeuvres and drinks and all of that. But really the biggest gift of all is the content. So we start with what's going on globally in the markets, what's going on within our country, how are tariffs and Fed speak and all of that impacting things. We'll look at sectors, and then we come right down to looking at individual stocks and how a trader, might consider trading, with example trades, given all that's happening in the market. So if you've never been, I'd highly recommend it. I'm going to be in both Dallas and Chicago, and looking forward to meeting many of you there. And if you want to see, a client perspective, if you go to my X, you can see a client perspective there. Okay. Oh, sorry. Okay. So let's, without further ado, get out to the charts, and we'll do like a very quick market overview. So today, S&P 500 hitting what? An all-time high. So Dean is saying he's going to be there on the 20th. I'm thrilled. Please make sure you come up and introduce yourself. I would love to meet you. Maybe we can even take a selfie together. That would be awesome. Here's our NASDAQ, not at an all-time high, but within a stone's throw of it. When we look at the Dow, this is a little different from the S&P and the NASDAQ in that it is not based on market cap, this index. It is based on the price of the stocks within it, the Dow 30, and it's also the smallest index stock-wise. But we can see here, if we're playing I Spy with my little eye, what do you guys see here? An index that just hit an all-time high, back on the 22nd, on Friday, but, is close to an all-time high. But we had a big, fat, inverted head and shoulders set up here, didn't we? Do you see it? We were talking about trend reversal patterns. Come to mama. Don't tell me this is going to give me a hard time. There it is. I'm drawing with invisible ink. Let me close it and see if I can open it again. Because as somebody with French Canadian heritage, to not have drawing tools for an entire 45 minutes, like perish the thought. There we go. So we have this big, fat, inverted head and shoulders. Now, somebody who analyzes a trend would say, hey, we went from 373 to 450, about a 76-point spread. So if you wanted to set up a target on that, some might say, I'm going to add 75 points. And my target might be somewhere around 525. That's a lot of room to move, right? Okay. So things are pretty bullish. Things are just pretty bullish. And, our VIX is now down under 15 at 14.3. So it's at the low end of where it's been in the last year, which shows a fairly high degree of confidence, right? Okay, so now that I've said all that, let's go and look at something that I want to show you with respect to trading plans. And I don't have every single trading plan, that I want to have ultimately on this list. Trader Talks. But if you haven't subscribed to this channel, you're going to want to do that. There's a button in the bottom right-hand corner of your screen. And we come, when we come up here to the Trader Talks channel, when you're on the home, it will show you whatever is currently being broadcast, which is Trading the Trend right now. And you know that because you're with me. But if we scroll down to Trade Management Mini Sessions, And if you've never looked at this list, this was just a bunch of extra content I created as a complement to the classes that I teach. And I'm in the midst right now of creating a series on candlestick patterns. I just posted 2 on X this morning, these 2 short, what's a bullish versus a bearish harami. So if you wanted to do some quick binge learning, and I've sorted these, so you'll notice that all of these kind of turquoise ones are candlestick patterns. There are 2 on the power of compounding, which if you haven't watched, I not only say watch them yourselves, but share them with a friend. I think they're kind of the bomb.com. And then here are these trading plans. And here's a simple stock investing plan, a buy right where you're buying the stock and selling a covered call at the same time. I don't have one in here yet for a married put, which is where we're buying the stock and selling a put. But if you're looking for an example of a plan that you can use as a framework from which to create your own plan, I've got, the better part of a dozen in here. So feel free to use that as a resource. Okay. So let's come and look at Goldman Sachs. Let's start with a financial stock. So this, like everything else, got hit at the beginning of the year. And then on April 7th, as with so many other stocks, things really turned around and started moving to the upside. Oh, wouldn't you know it? It hit a new high today and is pulling back like to the tune of about 16 cents. But if we are looking at this and saying, well, we're seeing a classic higher high, higher high, higher high, higher high, and higher lows here, this uptrend appears to be still intact. Now, might we have a pullback given tomorrow there's a dividend? Yes. And would we be surprised by that? No. And so given this is now showing bearish, might we reconsider? Well, we might, or we might just say, hey, if we wanted to do this as a longer term trend trade, we might just go ahead. Now, before we pick this one, let's look at some other financial stocks. Oh, interesting, because this was bullish the last time I looked at it as well. So this is Truist Financial. It's up a modest, 7.5% year to date. Came in close to earnings, but was a bit of a mess, which is probably why we saw this pullback. But now it's moving again to the upside. And what we're seeing, when we look at some of these financials is there's, a lot of movement to the upside. And that's just, it's fascinating to me because so much of this, it was up, and we can get rid of these lines here, when I was preparing for this, and now they seem to be kind of pulling back a little bit. But when we take a look, and I'm just going to come in here to a tighter time frame, but we're up on this one 37% year to date on Citigroup. And we were breaking above these similar highs. So we had a bit of a panic pattern setting up. And so if you were looking at this as a longer term investor, how might you look at it? Well, you might say, well, I see this breaking out. I'm willing to invest. And if I look at, just in case the unexpected happens, if I look at this, my recent low is $90.68. So I'm going to write that down. It's $90.68. So where might I put a stop? Well, I might say, well, I'm going to, if I get stopped out, because I want to give it room to move, I might go 2 or 3% below that 90.68. So if I took my, well, and I've got a calculator over here. If I took my 90.68 and I multiplied that by 0.98. So let's make it 2% below. You could make it 3, you could make it 5. So that would be a stop of 88.86. Now you might say, but Barb, if it's breaking out above this resistance level, why wouldn't I put my stop 2% below that? Well, we could. So let's look at that. 96.27 times 0.98. Oh, I missed the point. So it would be 94.34 instead of 88. You might say, well, that looks a lot more appealing to me because then I'm only risking, just over $2 instead of risking, quite a bit more. But here's the question. Here is the question. What are the odds of being stopped out? What is the probability of being stopped out? And you're going, good point. Okay, well, it may be a good point. Why is that? Okay, so if we come out here to September and I look at that $94 level, I've got a 67% chance of it coming down. This is probability, this column here is probability of touching. So I've got a 67% probability of it coming down and at least kissing it. And now I'm locking in a loss when there's only a 33% chance of by September 19th of it currently of it being below that. So if I expand this and say, well, okay, what was the other stop we were looking at? Call it 89. Okay, so let's look at 89. Well, now I've only got a 27% chance of being stopped out and a 13.5% chance of it being, below that. But you might say, well, 27%, I don't really even like that. Well, then what are your other choices? Well, you could say, if I was willing to put a stop at 88, maybe I'd be willing to spend 45 cents a share, which is about half a percent, and buy a protective put just to get me through the next few weeks. And what is our expectation? I hate to use the word hope because I always say hope is a 4-letter word, in the world of trading. But our expectation is that we're expecting this stock to continue to go to the upside. And so the expectation is that this put would expire worthless. And would we be happy campers if that happened? We would. But in the event that this comes down below 89, then no matter what, we, can get out at that price as long as it's prior to September 19th. So we're buying kind of a short-term policy. Now, when is this typically used? It's typically used over earnings. But so with this one, we are going to go ahead and use the stop loss, but just so that, I just wanted to kind of explain the logic behind the thinking. Okay. So we are going to buy, and this is a city is trading at 90 currently at 96.61. So, we have a $500,000 account. This is just our example account here. Let's just make sure we don't have any C in here. And then let's do one other thing and let's see if this pays a dividend. So it pays a dividend of about 2.5% and has a PE ratio, price earnings, which means for every $14.30 invested in this company, it generates $1 of earnings, which puts, by many trader standards or investor standards, this in the value category. So, if we look at this, we could create a group for this. So we don't have here we do. We have a group for stocks that pay dividends. So we're buying this because our expectation is that it's going to continue to move to the upside, but we just want to draw our attention to the fact that it pays a dividend. Okay, so we're going to come back to our charts. We're going to buy, and we don't want to risk our rules for this account is that we don't want to risk more than $2,500. So if we're risking, about $8 a share, if we buy 200 shares, then we're risking about $1,600. Now, putting a stop loss in does not guarantee that we're going to get out at exactly the price requested. So I need to be clear about that, but it gives us an estimate. So we're going to buy 200 shares and we're going to put in a stop at 88.86. Now, once I'm in this trade, what are my management rules? Well, when I first got introduced to the world of trading back in 2011, I had a plan, and my plan said, every Monday thou shalt check all thy positions. And if I was using the 30-day moving average as a support level, and that appears to be a support level right now, I would move the stop. So let's say I had bought the stock back here when it crossed the 30-day moving average. My stop, let me just bring up my drawing tool again. So let's say I bought it here. My stop would have been about here. And then every Monday I would have checked, and when it came and bounced here, I might have moved my stop up to say 3% below that 30-day moving average. So say to about here. And then it came down and it didn't even kiss it, but it came within a stone's throw. And because I'm kind of conservative, I'm going to move the stop up to 3% below here. Okay. And then it comes up, and some Mondays I'm going to check and it's just going to be moving on up. And so I'm not going to do anything. And then it pulls back. Now with earnings, I might get rid of the stop and you put a protective put in place. Or if it's so far above the 30-day moving average, after the earnings announcement, I might just move the stop up because it kind of consolidated there to here. And then when it came up, and it didn't close below, but it kissed it, I might have moved it up here. And then kind of the rule is if it closes below the 30-day moving average, you snug the stop up to 3% below the low of that day. So I would have moved it up again here. And so, but we'd still be in the trade. But we're going to manage this on a weekly basis. Okay. So Noodle Brains, I like that handle. I love anybody with a sense of humor. So is it better to have a stop you manually move over a trailing stop? And I say yes to that. And the reason that, and this is just a personal preference, the reason I prefer that is, hey, on this day, if you had a trailing stop of say 3% or 5%, on this day when it came down so far, you may have been stopped out. And then the thing just continued to move to the upside. So I'd rather have a weekly discipline. You could pick Mondays or Wednesdays, or you could look at your positions every day. I mean, like it's up to you. But if this is a longer term investment, you might say, I'm going to look at this once a week. And if it ends up closing below this 30-day moving average, which look, it's come and kissed it 1, 2, 3, 4, 5, 6, 7, 8, like it's been hugging this line. If we get a red arrow, we'll snug the stop up. Okay. Or like if it moves up to here and then bounces off this as a support level and continues up, now chances are that 30-day moving average is going to kind of catch up with this old resistance line, which might become a new support line. But could you move your stop up then? Sure. Okay. Now let me just look at the chat because I saw a couple of questions. Somebody said, oh, I don't have on the trade, I don't have this probability of in the money and probability of touching. Okay, so, but you can customize it. So I have Barb's Basics with probability in the money. And I like to have open interest and volume. And so the way you do that is you can come here and say, customize your column sets. And so I just came in and I typed in, if you just start typing in probability, it'll give you these. What's the probability of it touching in the money, out of the money? Well, I figure we don't need both of those. But and then you can save it as and give it your own name, whatever you want. Probably not Barb's Basics within the money. And by the way, like that trade management mini sessions that I showed you, if you scroll to the very bottom, there's a short video on how to customize the option chain and how to customize, how to customize your charts, how to do all the things. Okay. Okay, so just a sec. Yeah, glad to read that more minis are coming. Okay, so I should show you this as well. Oh, sorry. So we're creating more and more short content. And in fact, there's this group here called Shorts. And if you click on that, it's just a whole bunch of short videos. Morningstar or abandoned baby candle, how to find stocks that beat earnings, how price patterns, and they're all like 2 minutes, I think, or less. They're all very short. Okay. And then, when we look at videos, if you come to videos, there's some short, it's live. Oh, that's telling us what's coming up next. But these shorts are great. And then I have the trade management mini sessions, those have all been done by me, but these shorts are done by all kinds of people. And you're seeing a lot more short video content that we're creating specifically to be shown on X also, which is why, and you may not, want to be super active on that platform. I only use X for my Schwab Life. I don't use it to follow anyone other than traders and motivational people. I post something motivational every day, or inspirational, or yeah. So yeah, the shorts are great. Okay, so for those that don't have time to watch a 45-minute video. Okay, so coming on back, so there's our first trade, and that's C. Now, let's look at Google. So in Google, if you watch that short I created on X last week, I mean, it is 2 of the top 10 stocks in the S&P 500, and similarly in the NASDAQ. So it is a heavy hitter. And we've seen this big bowl pattern kind of set up, and it's breaking above that now. And so if you look at Google and you think, like, is Google going away? Chances are that it's not. And I think pretty much everybody knows what Google is. Google is not only a company, well, Alphabet, it's become a verb. If you don't know something, people will say, Google it. It looks like these particular analysts are pretty bullish on Google. You can download their reports and have a look. If you don't know, much about this company, but, I think most of us do. But if you're saying, well, of course I know what Google is, but how is it doing as a company? We can come down here and say, well, what does the 5-year trend on earnings look like? Well, that looks pretty strong. It's gone up with one exception between 21 and 22 each year, a 28% increase. We saw a 14% increase year over year, but it's gone from $13 a share in sales per share to $28 a share in the last 5 years. And from just under $3 a share in 2020 on earnings to $8 a share. Now, does this mean trend is going to continue? No, but it gives us a sense of how this company has been. So if you said, Hey, I just inherited $1 million. Wouldn't that be nice? Cue the Bare Naked Ladies, who I saw this summer, and they were neither naked nor ladies, but they're, a fun Canadian band. But if it's breaking out, we might say, hey, I could see adding this to my portfolio. Is it in a strong sector? Well, if you're not sure of the sector, it's actually in the communication sector. And I don't get to pick what sector things go into, but it's in the communication sector. And how's that sector been doing? Well, funny you should ask, because I've got the sectors up here. This is just a public watch list. And if you are curious about, how I created these custom watch lists in that trade management mini session, there's a little video at the very bottom. They're all in that kind of turquoise on how to create that. But communications services has been the second strongest sector over the last 3 months. And it is the number one sector, go figure, over the last 4 weeks, trading weeks. And so if we look at that and say, okay, I don't want drama. I'm just trying to invest here in a way that's, a little, drama free. I could add, again, up to a $25,000 position. So if I look at this and I say, okay, it's really been the 30-day moving average has been holding as a support level. And again, the question is, do I say, hey, if this pulls back a little bit, because the last time it was up here was in February, am I going to get out, or do I give it a little more bandwidth and say this 198.36? And it just depends. If you're a short-term trader, you might say, yeah, there's no way I'm going to hang on, for 2% below that 198.36. 198.36 times 0.98 would give me 2% less. So that's 194.39 would be my stop on Google. And we're getting in at 211. And so we're taking a risk. So if I subtract that from 211.97, I should have just called it 212, we're risking $17 a share. So a little less than 10%. And that's $1,750. But if you have a $500,000 account, or $1 million account, you're saying, well, I'm willing to risk 0.5%. That would be 2,500. That would be within the realm of acceptable of risk. Yeah. So we're going to come to our trade tab, and we're going to right click, buy custom with stop. Okay, so we're going to buy just 100 shares because that's 21,000. That's under our 25,000. You might say, well, why aren't you buying, 200 or buying 110 shares or 20 shares to get to 25,000? It's because we want the ability to be able to perhaps sell a covered call if it starts going sideways, or use a protective put over earnings. And so, that's the reason that we want to have that 100. Now, if it's a super expensive stock, we might not be able to afford to buy 100 shares, so we might just, we might buy 10 or 15. And in our trading a smaller account class, we've done that fairly frequently. Okay. And again, how are we going to manage this? Same way. And if you go to that trading account, that trade management mini session, that trading plan, we go over, a potential way of managing your trades. Now, you can do this any way you want. Now, this does pay a dividend, but it's 0.4%. It's so teeny. We're just going to put this in growth stocks. Okay. And then, once a week, you're going to look at your positions. And like here with Celsius, we're up 63% on this stock, and we don't have an exit in place. And so that should be a red flag. There's no little chiclet here. It means you don't have an exit in place. Like, what in the Sam Hill is going on? Because what the market giveth, the market can taketh away. So this $4,635 that we're up, we could end up giving all of that back to the market. And so if we want to protect some of these gains, it might behoove us, and we might just come up here and say, okay, these are organized alphabetically. Is it in the wrong spot? No, we don't have an exit. And so, and then what you may also want to do is just say, hey, once a week, I'm going to go through and I'm going to look at every one of these stops, and I'll show you with Google. So with Google, if you want to see your stop, we're going to come over here. We're going to say show orders. And so that will show us where our stop order is. Okay. Now there's another order way down here. So if we owned extra shares, we might just want to move that stop loss up. But I just wanted to show you how you could see it. We are going to go to Celsius just to show you. So now, if you had just bought this yesterday and it's not showing up, maybe you put the stop loss order in and forgot to put in good till canceled. Maybe we bought this stock quite a while ago and stop losses, and then, all hell broke loose in our life and we didn't go in and update the stock. A stop is in place for either 3 months or 6 months, and then it expires. And so if you aren't updating your stop, it could be that it expired. And so, but we have 200 shares. So we are going to come up, look at Celsius and say, okay, here's our recent low. Or even if we want to come all the way back here to our 30-day moving average, it's better than having no stop at all. 5204 times 0.97. So that would be a stop at, if we put a stop 3% below the 30-day moving average, that would be a stop at 50.47. And you might say, like, there's no way I want to give back that much profit, $10 a share, that's $1,000. But how much are we up on this? We're up 11,000. So if we want to stay in the trade, we might give it more room and then just see what happens in the next week. And now you're back on your weekly routine. So if it continues to go up, this 30-day moving average will catch up. This is the furthest the 30 and the 10 have been apart from each other, but let's just get something in there. So if we come in here, we're going to create a closing order with a stop, and we're going to put that at 50.47. And then next week, we're going to look at it again and say, hey, should we move that up? And a stop doesn't guarantee, like if this were to gap down, we could end up out at a lower price. But now we'll see when we come in that we've got our chiclet. Now we've got less than 10 minutes. So John, I call them chiclets. I don't know if you have that here in the States, but when I was a kid, I used to get in my stocking every Christmas these packets of gum. I'll post a picture if I can find it. These little chiclets, and they were, at Christmas time, they were red and green. So here's one on RTX that, has an exit on a buy right covered call to both sell the stock and buy back the covered call. And so if there's no chiclet, like we have no little red sell sign here for GE, it means we don't have a stop for this stock either. And we have an even, bigger unrealized gain. And like I said, unrealized, it means it could end up turning into a loss. Has everybody ever done that? Turn something into a loss that you had a nice gain on? I know I used to do that on a trading strategy called long call verticals all the time. And then I changed my plan. Now, so that's that. So with Google, if you are bullish on Google, you might say, hey, I don't have this big account, so join us tomorrow for trading a smaller account. And we'll look at Google again and maybe look at a shorter term example trade on that. I think somebody's saying, what do you think about stops on options? I think having know when you're getting out of a trade before you get in, whether it's an option trade or a stock trade, and have a plan in place for every type of trading strategy that you have. So today I wanted to kind of focus on stocks. I know that James doesn't always do that, but I'm filling in for him today so I can do whatever I like. So here's AVGO. Now we have earnings coming on AVGO. And when is earnings coming? I think it's September 4th. It's next week. And so what we may say is, like, this is a really nice uptrend. It's a really strong company. It's in technology, which has been crushing it of late. So I would like to add this stock to my portfolio. But I want to protect myself in the event that things don't go quite according to plan. So my recent low here was 281.87. I'm going to buy a protective put to get me over the earnings hump. Okay. And so I'm going to look at adding 100 shares and then buying a protective put so that if it does gap down, because we've seen lots of stuff gap up and gap down lately, that I know that I can exit at a specific price. So if I come here and I say, okay, if I'm looking at the 280, how much is that going to cost? Like, is it worth it? Well, and I only need coverage through earnings, which is September 4th. So I come to September 5th, it's going to cost me $2.27 to 231. But then I know that I have the right, when I buy a put, it gives me the right to sell the stock at 280. So I'm going to come here. I want to buy 100 shares. And then I'm going to come to single order, first trigger sequence. And then I'm going to come up here and I'm going to say, I also want to buy a put. And this is a protective put. When we do them at the same time, we call it a married put. So how do we manage this? Well, we're going to be paying attention next on the 4th when earnings comes, okay, to make sure. Well, we'll see what happens. And then on the 5th, we have to decide. If the stock gaps up, this is going to expire worthless. We'll have paid $232 for this short-term coverage. Like, if you went to Europe, you might buy some kind of coverage to cover you in case you fell and broke your arm or, whatever. And that actually did happen to a friend of mine this year, which totally, which sucks, but at least she had coverage and could get herself back here. Yeah, so this is a short-term plan, and then we'll look at adding a stop. Okay, so these are going in, and we're putting this in, we're buying this as a growth stock, but we have a married put with it. Yeah, and we could wait to buy the stock after earnings, but let's say it gaps up. So there we are, we bought our put, so what if, it wasn't CrowdStrike, it was Snow. What if this happened? It's up $42 a share today, and you're going, dang it, I looked at this last week. I selected that strike for the put on AVGO because it represented a price that was 2% or 3% below this recent low here. So guys, we've talked about trading with a plan. We've talked about trying to make our trading drama-free. And how do we do that? We have a plan. We trade our plan. We have a routine. And then we follow it. And that takes so much of the angst out of it. I'm not saying that there aren't days that are tough in the markets and days that are tough in life in general sometimes, but we've now added this to our portfolio. So what did we do today? Well, we discussed protective puts. We discussed married puts, which is a protective put on the day of the stock, particularly appealing to some traders when earnings is coming up. And then we added a stop. We talked about maintaining our positions, our stock positions, and how we can go in and quickly make sure we have exits in place. And so here with AVGO, we have no chiclet. So we go, oh, did we forget to put a stop in? And when you click on it, it's going, no, I'm using a protective put for that one. Wondering. Okay, so guys, we added 3 new positions to our portfolio. Please hit like, hit subscribe, follow us in the land of Twitter, Barb Armstrong CS and Brent Moore CS. And I will see you in Trading a Smaller Account tomorrow. Stay tuned. Short Verticals is coming up next with Connie Hill. You won't want to miss it. Bye for now.